Day 19. Today's gonna be a very interesting, and I actually like this topic. It's actually interesting compared to the other ones. I will be talking about candle range theory. Nice. Another theory, but this theory I actually like compared to quarterly theory, which is just based off of time theory. This right here is actually based off candles. And if you see it on social media, it's usually called CRT, or power of 3. It's similar to AMD, but you can detect it off of candle closures, candle bodies, and things like that. So what is the candle range theory? It's a 3 candle pattern, if I could find my brush. It's a 3 candle pattern, and it could look something like this. Okay, it consists of 3 candles, and what the candle range theory is if a candle takes out a previous high of a candle and we reject off of something into, or it closes back into the range of this wick, we can expect the other candle to not take the high of the middle candle and aim for the other low of the candle, or at least 50% of this candle here, so 50%. And the other way that could be drawn is like this. We have one candle here. Our second candle takes out the low and closes back into the range. And then the third candle could be like this, targeting the high of this. So it's because this got tapped into the low and rejected, and the candle body closes inside, we can expect to see, if confluences and bias aligns, we can see or expect to see this third candle come to tap or take out this high, or at least retrace into a 50% if there's a fair value gap like this. Now, if you put your knowledge together, you might see that this kind of looks like a rejection block. And yes, this CRT can be seen with rejection blocks a lot. Okay, rejection blocks are kind of based off CRT. As you can see right here, we have this candle rejection, takes out this high, we expect to see this low, and then we see here price wicks in, taps this rejection block, doesn't go past or close above, and we head lower. Okay, they are very similar, they actually go kind of hand in hand. Now, CRTs, once again, price is fractal, so you can find CRTs on any time frame. So let's take the daily and let's take a look at this example right here. We have our, let's see, candle right here, and sometimes, because on a higher daily time frame, the next candle can actually take out both sides, okay? But let's say we are looking for a 3 candle pattern, such as this one. This right here, we see that this candle, we have a wick, it takes out this high, and we reject back into the range. What could we expect to see? We expect to see price take out the low of this candle, because we took out the high, we close back in, and then we can expect, it doesn't always have to be this candle, but notice how if you were to do the CRT, you could take 50%. You could have targeted the 50% because there's a fair value gap here, or you could have targeted the low as well. Alright. The daily candle is a lot of chops, so it's kind of hard to find a nice example. It is a lot easier to find on the lower time frame. Okay, this one right here. Right here, we see that this candle takes out this wick, okay? This candle takes out this wick. What can we expect to see if this candle closes inside? We can expect to see price react to at least the 50%, which this candle taps into. And we see that price takes out the opposite high. Now, you can clearly see that most of the CRT happens either at higher highs or the lowest lows or the highest highs. That's because the CRT has more confluence. If you line it up, liquidity sweeps could be because that's why this came down and respected back in. Now let's take a look at the 15-minute. 15-minute, you can still see CRTs happening. Let's take a look at this example. We see here we have this high and we have this low. We see that price takes out this low and we come back into and we close in between this candle. What can we expect to see with CRT is with the next candle, we can expect to see price come up into this fair value gap or the 50% of this candle, or we take out the high. As you can see right here, we take out this high right here. Same thing for here, except this was taken within the same candle. But you can see here, price came up, wicked and took out this high, and then price came back into the range and took out this low. This is another good example. Price took out this high, we had this wick, a doji candle, and then we close inside of this range. What can we expect to see? The next candle or the next following candles to hit at least 50% of this candle, or we hit the other side. Now, how can we use this to our advantage? CRTs can happen within fair value gaps, higher highs, lows, high lows, sweeps, okay? We can use this to our advantage to confirm whether or not a confluence is strong. Let's take, for example, we have this 15-minute here, okay? We see here that price comes down, we tap in, we take out this low, we see that the second candle comes down, wicks, comes up, and closes, which means that candle range theory, we can expect to see price not take this low, comes down, taps the rejection block, respects the 15-minute, and where do we expect price to see? We expect price to see the other high. As you can see here, you could have shorted right here. Once you saw this candle closure, stop below the low, and you could have targeted this high, okay? You can also use CRT to get your bias. What do I mean by that? Let's say, for example, we are here. Here. Let's say I do a little replay, and we are here. You're waiting. Next candle. Come on, play. Nice, okay. We see here this candle closes, and we see here we sweep this candle. We come in back into this range. We can expect price to either come back, tap this fair value gap, which should align at the 50% as well. Perfect, they line up perfectly. So when you come back in, you could take the rejection block order, stop below the low, and target the 50% or at least the high. And as you can see right here, if I were to go and set a buy limit, you will see price gets tapped in and we absolutely would have smashed TP, okay? Now, once the CRT happens, we can also flip our bias if biases align. Leave. Great. Now, this also happens on the 5-minute, the 1-minute. Let's take a look at an example of 1-minute CRTs. 1-minute CRTs aren't always the best. And why is this? It's because we're on a lower time frame. The 1-minute likes to do fake moves. It is harder to predict. So definitely use CRTs more on the higher time frame. I suggest the 15-minute, the 1 hour, the 4 hour, and the daily. Great. Okay, this one here is a great example as well. We take out this low, we come back into the range, we have a rejection block. You could have entered off of the rejection block, and where do we go and see where price could go? Price could go to the high of this candle. Bang. Would have smashed TP for a 121.5. I like to use these on higher time frames. So how can you use higher time frames and scale down to the lower time frame to get your trade? Let's say, for example, this right here again. Let's do a little replay. Start new. Let's say the hourly finally closes. We have our hourly that took out this low. We see that price came back into this range. We have a daily fair value gap right here, and we have this high right here. Okay. With the candle range theory, we expect to see price either come back into this fair value gap or take out this high. So when we scroll down to the 5 minute right here, you can see the hourly closes right here. Let me mark out the rejection block as well, which it doesn't hit, but that is okay. Always mark out your rejection blocks. And when you're coming down and you're going, let's say on the 5 minute, this is super slow, but wow, we get a CRT again, okay, right here. And then if we were to play this out, we can see price could have tapped this reject block low, and you could have target at least 50%, or you can target the CRT high. Let's see if this plays out. Okay. Alright, so we would have missed TP by a little bit. It tapped the reject block and went up. But this is how you can use CRTs to get your buys. We have a bullish buys. Sure, you could have gone stopped out. You could have been patient. Taps into these order block as well as the projection block. You could have entered right here and higher. Okay. Obviously, I did not do a top-down analysis, so taking a trade like that is, yeah, you know how it goes. Okay. Now, important. CRT and time is very important. What I like to use with CRT is the 10 a.m. This is why I have this. Of course, it's not here, but I have the PO3 higher time frame by Exo Trades. Why? You are able to see the 4-hour candles, okay? With using the 4-hour candles, you are able to see CRT. If you see a 4-hour candle that looks like this and we close in, we can expect to see price target, you know, like the highs. Same with this one. If price wicks in and you see 1, 2, 3, you can use this on the lower time frame to target the low right here, or the low of right here. Okay. If we had the power of 3 right next to us also, we can see that we have the CRT wicks in. We see this on our little indicator. We can look to expect to see buys off of a reject block like this. And where do we target? Because of CRT, we would target the high of the candle of right here, okay? Nice. I like to use CRT to get my bias. So let's say, for example, this candle closure closed inside this range. Obviously it didn't, but let's say it did. What we can expect to see is using this candle, adding in AMD, we can expect to see accumulation, manipulation a little higher, maybe tap into a reject block, tap into a 1 minute, 5 minute, and then we can expect to see distribution lower to the 50% of this candle as well as this low. I hope you're following along. Okay, let me explain that again. Let's say, for example, this candle closed inside of here, and we have a new 10 a.m. candle open. If this 10 a.m. candle opens, we can expect to see manipulation upwards a little bit, but it will never go past this. And then we would distribute lower, targeting the other side. Let's look at 10 a.m. candles. 10 a.m. CRT does not always work. As you can see here, this 10 a.m. candle closed back in the range. It probably tapped 50% with this candle, but it did not take this low. However, with this candle, you can expect to see some sort of distribution lower into the 50% of this candle. You can see it taps. Let's look at another 10 a.m. This is when CRT doesn't work. This CRT has already been completed, swept, and it got completed within the one candle, okay? Then this 10 a.m. is more of a continuation. There is no CRT anymore unless we see this candle reject off this high, come back into the range we would expect to see lower. Another CRT that you could use is the 930. Where is 930? Okay. 930 or the 9 a.m. But I like to use the 930. So we see here we have the 930 CRT. We have our CRT low. We see that price manipulated lower today. So we want to target the CRT high. And let's see. If we scroll on down to the 1 minute time frame, we see right here CRT low gets swept. Okay, now you see CRT low gets swept. Where do we expect to see next? We expect to see the high being taken, which is why I took this long today. That lined up with my 9:30 a.m. model. It was like right here. Okay, great. So that is the video. CRT, they can be used on daily time frames to find your bias, 4-hour time frame to find your bias. You can use the 15-minute 9:30 CRT or the 10 a.m. 4-hour CRTs. Those are the best CRTs that my personal belief is the best to use. Mark out your 9:30 CRT low, CRT high. If one gets taken and it comes back into the range, you can expect to see the other high being taken. Once again, if your confluence is aligned, if your bias aligns, that is when it works well, okay? Never take a trade off of just one theory or one confluence. I hope you guys took away a lot of information in this video, and peace out.